Right now, everyone is piling into the same handful of overcrowded AI stocks, while at the same time, a much smaller group of companies is busy building the infrastructure the next phase of the AI boom actually runs on. And almost nobody is talking about them, which is why it's such a great investment opportunity. That's the whole point of this video. I'm not here to hand you the same usual suspects like Nvidia that have already rocketed higher. Instead, I went looking for 4 AI-focused companies that still have serious room to run higher. That's because their growth story is just starting to get interesting, and now the fundamental data backs up the excitement, not just vaporware and hype. Now, before we go any further, if you find this kind of stock insight useful, then do me a favor and hit that like button. It tells YouTube to push more videos like this into your feed so you get less hype and less nonsense. And by the way, I'm Steve Reitmeister, but all my friends call me Righty. I spent nearly 20 years the editor-in-chief at Zacks.com. And today I'm a partner at WallStreetZen, where our quant rating system analyzes thousands of data points to figure out which stocks have the best shot at beating the market. And a quick reminder before we dig in, this is all for educational purposes. Investing always carries risk, so do your own homework before putting real money to work. We will get things started with Corsair Gaming with a symbol of CRSR. Now, for years, Corsair was the gaming peripherals company. We're talking about keyboards, memory, power supplies, the stuff that goes inside a gaming enthusiast rig, right? Solid business, but not exactly something that screams artificial intelligence. So here's where it gets exciting now. In late May, Corsair launched an entirely new line of products called Corsair Pro. This is a family of AI workstations and servers aimed at companies that want to run AI computing locally on their own premises instead of renting it out to some of the big cloud providers. So this is a company taking the hardware expertise it spent decades building and pointing it straight at the fastest growing demand in technology, that being the thriving AI market. Best of all, the business behind the pivot is showing real signs of life. That includes the street expectations of 194% earnings growth in the year ahead. Let me repeat that, 194% earnings growth. That growth rate may prove to be even higher as the company has beaten the stuffing out of estimates with 2 massive quarterly beats in a row. Now, here's where our data comes in to back up that growth story. Corsair carries an overall Zen rating of A, which is a strong buy recommendation. Right now, it's in the top 3% of all stocks our model tracks based upon its attractive fundamental profile. And it's actually the #1 rated stock in the entire computer hardware industry, topping a list of other names like Dell and SanDisk. Yeah, so pretty elite company. In case you're not familiar, the Zen Ratings quant model runs every stock through 115 separate fundamental factors and then breaks it down into 7 component grades, which covers vital areas like value, growth, sentiment, and financial health. When you look under the hood at Corsair, we find both financials and momentum in the top 17% of all stocks we track, indicating that the balance sheet is rock solid and the stock has some price strength behind it. But the standout component is value. It scores in the top 3% of all stocks, which portends well for more upside ahead. Growth, safety, and sentiment all come in as C, but this is the largest category, meaning the more accurate statement is to say that even in these areas, they are still in the top 30% of all stocks. So this is not really a mark against shares. But when you put it all together, you've got a turnaround unfolding as the company reinvents itself for the AI era. The growth is showing up, as is the improving fundamental profile. The only thing missing is the rise in shares. No doubt that comes in time as the growth continues to unfold. And a quick heads up, if you want to discover more under the radar stocks like this, then the best thing you can do right now is to sign up for my next live training session this coming Monday. The focus is on timely market insights plus my top picks. It's totally free, but you do need to sign up. Do that now to join me this coming Monday at 7 p.m. Eastern Time. Just go to wallstreetzen.com/live. All right, moving on. The next company has been winning quietly for years, and it's hiding at the very top of its industry where almost nobody thinks to look. This brings us to Ooma Incorporated with a symbol of OOMA. This company might be the most overlooked stock in this video today, and that's exactly why I'm excited to talk about it now. Ooma runs a cloud-based communications platform. Now, in plain English, they provide phone and communication systems for businesses and homes delivered over the internet through software. It's a sticky business that customers sign up for and rarely leave, which helps fuel long-term growth. So where does the AI fit into the story, right? Ooma has been layering AI capabilities into the platform, the kind of intelligent call handling and automation that makes a small business feel like they have a full support team. There's no flashy AI headline here. It's AI making an existing product better behind the scenes and getting customers to pay more more for it. And here's the number that matters most for Ooma. Current earnings estimates call for 66% year-over-year earnings growth, which absolutely towers over the industry and the broader market. This is quite likely to come true as Ooma is riding an earnings beat streak of 11 consecutive quarters. This is a small company with just $500 million in market cap, so it's little wonder that most the Wall Street firms are not covering shares at this time. But those firms on the case are very bullish, pointing to serious upside potential for shares in the year ahead. Our Zen Ratings model is equally enthusiastic, not just at A-rated, but actually in the top 1% of all stocks for its special fundamental profile. It's also the #1 ranked stock out of 52 in the entire telecom industry. When a company this small sits at the very top of its whole industry, it's definitely worth a closer look. So before I continue, let me remind you that the Zen Ratings are updated daily. So for the latest data on this stock or any other, then simply enter the ticker on WallStreetZen.com. Digging into the component grades for Ooma, there is a few standouts worth pointing out. The AI factor grade lands in the top 10%. That's our proprietary AI algorithm that reviews mountains of data to detect subtle patterns that indicate a high potential of future outperformance. Its sentiment grade is also excellent in the top 5% of all stocks, meaning the smart money crowd is on board this stock already. But the growth grade is the headline story. Ooma scores in the top 1% for growth. No doubt their 11 straight earnings beats has a lot to do with that and increases the odds of more beats ahead. But as always, there are some risks to consider. Remember, this is a small company, and that can lead to more volatile price action than some folks can stomach. All in all, there's a lot to like about Ooma, like the 66% earnings growth, or the 11 straight earnings beats, or the top rating in the entire telecom industry, and their elite Zen rating in the top 1% of all stocks that generally points to outperformance in the months ahead. Note that I like Ooma so much that it is one of the top 20 stocks in my Zen Investor newsletter portfolio. By the way, if you're getting value out of this video so far, then take a second to subscribe and hit that notification bell. I put out fresh stock breakdowns like this every week, and subscribing makes sure the next batch of top stocks actually ends up in your feed instead of getting lost in the shuffle. All right, let's keep rolling with our third stock leaning into AI. I'm talking about Ibex Limited with the symbol of IBEX. This company sits right in the eye of the AI storm. In an industry, a lot of people assume AI is about to wipe out. And that's exactly why it's so interesting. Ibex runs customer experience operations. They handle customer support and engagement for many big brands. Now, the easy assumption is that AI is going to gut their entire business, but Ibex has flipped that script on that silly notion, right? Instead, they built an AI-driven platform called Wave IX that weaves generative AI directly into how they serve clients. So, artificial intelligence is not putting them out of business. Rather, it's bolstering their already impressive offering. The proof of which shows up in Ibex's revenue growth of 17% per year, which has translated into 45% earnings growth because of expanding profit margins. For as good as that is, it gets even better when I tell you that management recently raised guidance for the future. This is likely not a hollow boast, as the management team has guided Ibex to 9 consecutive earnings beats. Once again, the Zen Rating smiles in this stock. In this case, we have an A rating, which translates to a strong buy recommendation. The two component grades that jump off the page are for value and financials. Now, Ibex scores in the top 3% of all stocks in both these vital categories. That combination is rare. It's telling you you have a company with a generally strong balance sheet and impressive operational metrics, while at the same time, the price is an outright bargain. Now, the honest risk, and it's different kind than the others. Ibex's momentum grade is generally weak, landing in the bottom quarter of the market. That's the price of admission for an under-the-radar pick like this one. You're buying a high-quality, AI-driven business precisely because other investors are asleep at the wheel. The risk is that it never comes to fruition. The reward is that the earnings beats continue and the stock finally takes off to the races. So far, we have reviewed 3 very different kinds of companies. The one commonality is their usage of AI to improve their business. But the last pick is the most unique of the bunch. It's the one I'd argue every AI investor should understand. Because no matter which of these AI bets pays off, this final company quietly profits from all of them. And Wall Street's top analysts already know it. Before we get to that final pick, one quick thing. If you want to stay one step ahead of the market, then join me live every Monday at 7 p.m. Eastern Time. That is when I share my updated market outlook and trading plan to outperform. This is also when I share my trade of the week. Based on our proven Zen Ratings quant model and my greater than 40 years of investing experience. It's a free event, but you do need to register. Just go to wallstreetzen.com/live or click the link in the description or scan the QR code on your screen. Just pause the video for a moment to sign up, and then I look forward to seeing you on Monday. Let's close out this unique stock list with Keysight technology with a symbol of keys, right? Here's a question almost nobody asks about the AI boom. Before any of these AI chips, servers, or networks ever ship, how does anyone know they actually work? Well, somebody has to test them. And that somebody is this final company, Keysight Technologies, right? They make the test and measurement systems that validate the most advanced technology on the planet. Now, when a company designs a cutting-edge AI chip or builds the high-speed networking gear that wires up a data center, Keysight's equipment is what proves it performs the way it's supposed to. So no matter which AI chip maker wins, no matter which data center build-out comes out on top, the hardware still has to pass through critical testing tools like Keysight's first. They sell these necessary picks and shovels to the entire AI gold rush. The AI build-out is showing up directly in their numbers in a big way. Keysight has been reporting record orders driven by AI and data center demand, and that's flowed straight through to the bottom line. In the past year alone, they have enjoyed robust 19% revenue growth, and that has turned into 43% earnings growth that greatly tops their industry. Just like the last two stocks we've discussed, Keysight has enjoyed a long and remarkably consistent streak of earnings beats. In this case, Wall Street is paying close attention. This no doubt explains why 7 analysts are pounding the table with strong buy recommendations. And here's something that matters a lot. Many of those analysts behind those recommendations are in the top 1% of analysts we track based upon their actual stock picking performance. Meaning, when these folks talk up a stock, others are wise to listen. It will be a shock to no one when I once again say we have another elite A-rated stock on our hand, according to the Zen Ratings model. This includes some standout component grades, starting off with their top 5% showing for both momentum and financial strength. A notch better than that is the top 4% showing for our AI component, which often points to the most timely stocks. And even one notch better is the sentiment grade in the top 3% of all stocks. Overall, you've got strong fundamentals, strong price action, and the smart money crowd all pointing in a very bullish direction for Keysight. The one grade that runs a little bit cooler is value. That C grade says that value is only middle of the pack. That's a polite way of saying the market may already know about this great company and has priced it in accordingly. So unlike some of the other stocks discussed, it's not a screaming bargain right now. This is more of a GARP stock where we are buying the growth at a reasonable price. But if you believe that AI growth will continue, which is a pretty safe bet, and Keysight will keep up its beat and raise track record, then you have the makings of another great future outperformer. There you have it. 4 exciting ways to play AI growth outside the usual suspect stocks and outside the usual obscenely overvalued shares. Now I want to hear from you guys. Which of these 4 tickers do you like the most and why? Or are there other hidden gem AI names you have your eye on instead? Please share it all in the comment section below for the benefit of our community. Now, if you want to keep looking for under-the-radar stock ideas, then I suggest checking out the video that's popping up on your screen right now. I share some rare penny stocks that actually have impressive fundamentals and growth prospects. These stocks are definitely worth your attention, so check it out now.